Hi, I'm Bonnie Fleshman with Douglas Realty, and today I am going to introduce you to Pete O'Donnell with Main Street Home Loans to talk about what is different in today's lending area of the real estate market so that you can be up to date and learn everything that's going on today. So this is Pete O'Donnell.
How you
Hi,
doing?
Pete.
Hey, thank you, Bonnie. So yes, I'm Pete with Main Street Home Loans. My personal office is in Severna Park, Maryland. I've been in the industry for 23 years, and Bonnie and I thought it would be great to put just some information out to you so we can answer some of the questions that I think a lot of people have in today's market.
Yeah, I think the first question I would like to ask you is, if somebody was pre-qualified prior to all the changes from the COVID-19, how has that affected their ability to buy a house and their pre-qualification?
Great question. I would say the first thing I would recommend, if you've been pre-approved prior to COVID-19, contact your lender and ask if there's been any changes or deviation in the programs that are available to you. The biggest impact that we're seeing would be on government loans, which are FHA, VA loans, and those that have credit scores under a 660 threshold. There are still options out there for you, but some lenders have pulled out altogether and won't originate any new loans with that profile. Others have allowed them to move forward, but they might have put a little bit more underwriting criteria involved. They might ask for more in cash reserves after the loan closes, which just means you have a little bit of money left in the bank. Or they might have pulled back on what's called their DTI, their debt to income, and you may not be able to qualify quite as high as you were prior to this. So again, reach out to the lender that pre-approved you, especially if you're in that 660 or below credit score category. The other thing that we should talk about would be jumbo financing. In Anne Arundel County, this is loan amounts that is above $520,950. If you're looking in that area, definitely reach back out. There are, kind of similar to the lower end credit scores, there are lenders that have pulled out altogether, or others that have put a little bit tighter restrictions. At the end of the day, lenders are still lending money, mortgages are still going forward, but you just want to kind of tiptoe through it, and you want to have open communication with your lenders.
Okay, what has caused them to make these changes? Why are they doing that?
They're doing that because they're recognizing, as we all are, that we have issues in our economy. So the concern is that those types of loans might not perform as well as they would have prior to the economy issues, and where borrowers are having issues with making their ends meet, getting their bills paid, and a lot of that has to do with the employment issues that we're having. So lenders are just being a little bit more restrictive and making sure that these loans are going to perform on the other side.
So they're just being extra cautious due to all the problems with people losing jobs or being furloughed for temporarily and all kinds of other situations that could get them in trouble, I guess.
Correct.
Okay.
Yep.
Now, if you're a buyer and you're under contract currently, what concerns should you have and how should you deal with that?
The biggest concern that might come up, and if you're already under contract and you've already started your application with a lender, you should be in good standing. Generally, when you start the application, even if there are changes to the loan program, most lenders will still honor those programs prior to the changes if your application was before the change. But you could see some time constraints. So if you came in and you needed a 30-day closing, you may have an issue with meeting that 30-day mark. If you can imagine, every kind of channel in the lending industry has been impacted, whether that's the lender itself, title companies, appraisers, just verifying employment. Everything is a little bit slower. And add to that the fact that most people are working remotely, so they're kind of coming up for air and figuring out that process. What I will say is that as we get further into this, most companies have adapted, and we're starting to see these channels move a little bit quicker because everyone's now got their home office set up. They understand how to communicate back and forth with their other coworkers. So, to answer the question again, I would just state that it's a potential for a time issue if you're under contract right now.
Okay, that's great. Everybody's been talking about mortgage forbearance, and could you explain what impact that might have on a person if they choose to go that route? Exactly what is mortgage forbearance and how is it going to affect them down the road?
Yep, that's another great question. So the CARE Act that came out by the government is to help give some type of financial relief to those that need it. And the biggest thing they recognized was the mortgage payments were something that they would have to open up and be more flexible with. So they're giving you an opportunity to potentially have up to 180 days of forbearance on your mortgage, where you might not have to make a payment at all during that time frame, or potentially a reduced payment during that time frame. First step, call your servicer. I wouldn't just arbitrarily assume that you're going to be able to do it. Call your servicer and have that open dialogue with them, because you not only want to know if you will qualify, which most will, but you also want to understand what the terms are going to be. This is not free money. This does not mean that for those 180 days, the mortgage payments are going to evaporate, or your mortgage balance is going to come down as if you made those payments. This is going to be added onto the back end of your loan, and at some point you are going to have to make that. So you want to understand, does that mean after 180 days, do I have a lump sum that's due? Is it going to be spread out over the remaining term of my loan? Or is my loan going to arbitrarily be increased, my mortgage payment going to be increased each month thereafter until I make that money back? So if you need it, it's there, it's a resource. If you can, you make your payment and you're comfortable doing so, I would highly recommend continuing on as normal.
Is this going to affect their credit ratings?
No, it would not. But again, make sure you communicate with the servicer, because there's always that issue where there could be a glitch where the servicer marks it as late. So if you do have an agreement with them and there's ever any late payments on the mortgage after the fact, you're going to have a lot better chance of getting them removed. But it should not have any negative impact on there, and you should not have any additional fees as a result of doing this.
Okay, so if they opt for this route, they just need to make sure they verify everything through the lender, maybe get something in writing that they're approved for the forbearance, so that they're not just marked as late.
Correct.
And then they would have something, if it was accidentally marked as late, to fall back on and prove that, hey, I have permission to do this program. So some people, I have heard that their program said everything was going to be due at the end of the 180. Would they do that? Like one big lump sum at the end of the 180 days? That doesn't seem to make sense.
Right.
I haven't heard that.
I can't imagine that a lender would do that, because the lenders want to make sure that this thing gets back on track and they start getting into a rhythm again with all their borrowers and payments are being made. No easier way to stop that than to say you owe us 6 months of mortgage payments at one time. So it would have to be spread out over a designated period. I couldn't imagine that a lender would do that.
Okay. Yeah, I know. I've heard a lot of different things out there. Now, has anything changed with as far as getting appraisals done?
Yes. Yeah, there's actually been some positive stuff coming from the appraisal side. On a conventional loan, we're starting to see more and more what's called appraisal waivers. What that means is when you start a loan process, one of the first steps is an automated system. It's actually an underwriting process that's done by a computer. One of the facets of that is it runs the loan through a database, and it looks at the property address, it looks at the contract sales price, and it determines if it feels that that price is justified based on recent home sales around it. So there are times that we're literally putting this into automated systems, and it's telling us we don't even need to get an appraisal done. Now that would be specific, and it is. It's pretty interesting to see it, and we're seeing more and more of it, which means we're recognizing that they've kind of relaxed the systems to allow more of this, so that we don't have to have an appraiser going into a house and potentially, being a problem versus helpful. Other aspects of it, whether it's a conventional loan, an FHA or VA, we're allowed to have an exterior only appraisal. That would mean that the appraiser actually has to go to the property, look at the property from the outside of the house and the neighborhood, and still go out and take a look at other comparable homes. They do it without going into the interior of the property.
Okay.
What I would say is that these are all great, and it's all about safety first and getting this thing under control. But the lender has to have communication with their borrower and with the borrower's agent before they just assume that we're not going to do an appraisal or we're going to do an exterior only. That borrower has to be part of that decision-making process. Some borrowers, just from a comfort aspect, are going to say that they want to have the appraiser to go into the property, that they really want to understand and make sure the value is accurate. I might have an agent that says, look, I really want, on an FHA loan, this appraiser needs to go inside because there's some things that I think that we need repaired. and we want the FHA appraiser to flag that. Or it could be something like a lot of upgrades that they really need to be in this house to be able to see the kitchen that was put in here, or the upgrades that were done to the basement that they might not recognize. So appraisals are a lot more flexible, but the communication with the lender, borrower, and agent really needs to be there on the front end.
Okay, that sounds good. Just to like sum things up, are there any helpful tips or hints or anything you would recommend for someone who's considering buying in today's market?
The biggest concern going forward, and the longer we go forward, would be a potential impact to that borrower's income. I've had a lot of borrowers call over the last couple of weeks and say, hey, I know that we pre-qualified to this level, but we were using overtime. The overtime is no longer available. Is that going to be a problem? Or I have borrowers that say, look, I was getting commission income. I sell cars and I still have some, but it's not to the level that it was. Is this going to be a problem? So the communication between the borrower and a lender is going to be vital to make sure that we can really justify that income, and that the changes aren't going to be too big of an impact that would hinder the ability for final approval.
Okay, all right. So, well, thanks for your time. I think that, I just wanted to kind of give people out there an idea of what to be aware of and what to look for if they decide to buy a home right now.
Yep.
And I just want to tell everyone, if you would like to talk further with Pete, if you have any more questions about loans, either now or in the near future, he's Pete O'Donnell from Main Street Home Loans. He's been my lender for 20 some years. He does a great job. His number is 410-299-2043. And what's your website, Pete?
It's just my name. It's PeteO'Donnell.com.
Okay. So you can go to his website and check him out, or you can go to my website or call me. Again, Bonnie Fleshman, Douglas Realty. My number is 443-994-1468. So have a good day, and I hope to hear from you all soon. Take care.
Thank you.